Hey everyone, Dan here. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. It helps a lot. And also keep in mind that these are my own thoughts, opinions, and ideas. These are not meant to be, nor should you take them as, investment or trading advice in any way, shape, or form. Do your own due diligence, put in the work for yourself, and make your decisions based on that. Enjoy. All right, everyone, we're about an hour after market close on Wednesday, August 11th. We're going to take our daily look at SoFi. And today's rundown is going to be, we're going to look at the chart and do an update on that. And then I'm going to go through a few points that I think will be most important for the earnings call and earnings report coming up. And then we'll take a look at a few articles and sort of see what their opinions are and why. And then we'll call it a video. This is the second time I'm recording the video because the first video file got corrupted, so I'm going to cross my fingers and hope for the best because I'm going to run out of time here eventually. All right, so SoFi down a little over 0.5% today, and nothing like catastrophic in my mind. There was a bit of a bump up in volume that we saw, which is unfortunate to see on a selling day. Almost 17 million today versus 12.5 the day before and like 15.5 the day before that. So definitely increasing, but this is part of what can just come up ahead of earnings or as we get close to earnings. So I wouldn't be surprised if we see some similar activity tomorrow, some folks just unwilling or not wanting to really absorb the risk of holding through earnings. It's definitely understandable. And just be aware of that for your own mind if you are worried about any of your short-term positions. I know that to the extent folks are holding things longer term and they're investing, this may not be really like something that they're concerned about unless something comes out of earnings that actually seems concerning. But to the extent that there's just short-term folks peeling off because they don't want to absorb the risk, then investors aren't worried. But if you're playing short-term, then something to consider in my opinion. Now, we have had this big pain that we all are super aware of. A commenter had pointed out that we have seen about a 12% run-up, which I guess tracks from like the close of July 27th. We closed at 14.92 or $14.92. I don't know why I'm saying it like that, to today at 16.90. And yeah, that's about a 12% increase. So that commenter, I think his point was just to say like, hey, maybe we have had a little bit of a run-up. To my mind, that's not the run-up that I would be concerned about that would then cause an otherwise good earnings report to be sold off heavily. To me, a 12% run-up in the last couple of weeks versus what we've seen in the weeks leading up to that, it still doesn't feel like it's pricing in really good earnings to me. I could absolutely be wrong. This is all so much speculation. So just remember, take everything that I'm saying around earnings with a big grain of salt because you just don't know what the ramifications or the fallout is going to be from a good earnings call or even a bad earnings call. I'm sure you all have seen things go sideways or in really unexpected directions, so just keep that in mind. All right, so the chart to me is still holding up really well. We are now following this purple uptrend line up as well as this green uptrend line up. Now, there is an interesting nexus point here that's going to be happening after Friday and before close of day on Monday. So the extent to which it decides to do something there, we could see something playing out additionally from a chart perspective. But in my mind, if there is an outsized reaction to earnings, either up or down, that will probably supersede anything that has to do with the chart. But otherwise, this is holding up relatively well, and honestly, I wouldn't mind an outsized reaction to earnings because I wouldn't mind drawing up a new chart. I'm glad with how this one has held up, but I am sort of tired of looking at the same old chart. That's not a great reason to ditch it, but I would enjoy plotting something new and seeing what we could expect. It would feel invigorating. All right, so the MACD continues to trudge upward. We did see a little rolling down in the histogram today. You see 0.33 yesterday and then 0.327 today. So you would expect it to roll down a little bit on a red day. Interestingly enough, the MACD line itself was minus 0.33 yesterday, coming to minus 0.26 today. So still continuing to move up. So to me, that says that the bullish momentum is still there, and that even though there was some selling pressure today, that hasn't done anything to threaten dying down on the MACD side of things. But it's of course yet to be seen. The next few days will be telling. On the MA side of things, it's still moving in the direction that I would like to see it moving in. The 20 is curling up toward the 50 is coming down toward the 20, and the price action is right in between. So this allows the 20 to help carry us up. The next big bullish movement, in my opinion, is that 20 crossing over the 50 and carrying the price along with it. If we see that happen, there's going to be an outsized reaction price-wise just from a charting perspective alone. Now, RSI is still pitting itself to the midline here, kind of struggling back and forth on whether or not it's going to be able to establish over that midline and move on. But that's kind of what I would expect on this relatively sideways last few days. So nothing that seems overly concerning there to me. So that is the chart as I see it at the moment. So if you just came for the chart, there you go, 5-6 minutes, you're in and out. Enjoy the rest of your night. Now, let me go through quickly as we make a shift into the earnings section of the video. These are the things that I think will be important coming out of the call and the report tomorrow. I could be completely wrong. Institutions and retail investors and the overall sentiment of the market as it pertains to SoFi could be looking for totally different things. And so all of these things could play out in a favorable direction in my mind, and it could still have a downward reaction. I don't know, but let me just run through these really quick. Are we looking for a jump up in overall users, a jump up in Galileo revenue and usership, and be looking to see if there's any indication of an adverse impact on revenue as it pertains to student loans or other types of loans not being paid. Somebody had put this in the comments. I thought it was a fair point to raise. I don't know why that wouldn't have impacted Q1 if that was the case, but I honestly am not very up to date or well versed on the loan situation, the loan forgiveness or deferment or what's been going on with the pandemic and loans and stuff like that. I don't know if there's something that would impact Q2 that didn't impact Q1 or what have you, but I thought I should mention it here. Any surprise announcements, good or bad, including any surprisingly good or bad guidance, those things to me would sort of be big drivers in terms of where sentiment takes us after tomorrow. And, if there's anything that sort of indicates institutional interests could be increasing, or if there's any clarification around like why institutional interests could be staying away, I really doubt that anything will be explicitly said to that point, but there may be some info that comes out that we could glean or try to extract or extrapolate that info from. And then in terms of what we could see following the report and the call, we could be seeing some refactoring of analyst ratings. At this point, these analysts may be feeling that their potential return on these, that their price targets are kind of outdated because they were initiated at a time when the price was much different, maybe around this area, and that they would use whatever comes out with earnings and or with the call in order to just kind of refactor what it is. And this may mean that they even keep their buy rating or their outperform rating or what have you, but then just change their price target from X to Y. So we could see that, and that could of course have some residual impact on that trading day and the coming trading days. So you never know exactly when those things are going to come out, but I would just keep an eye out for them. To me, that could play a factor in the price action in the days ahead. And then, especially if there's some really good earnings and guidance and stuff like that, and things seem pretty positive, maybe we'll see some additional analysts come in, so we're not just stuck with this sad number of 3. Now, I'm going to quickly talk about short interest, and then if you don't want to look at these 3 articles with me, then you can hop out in about 10 minutes and you will have had a great day today. Okay, so short interest jumped up almost 11% today. And now I've been screaming in the last few videos, not actually screaming, but I've been mentioning because I've seen stuff still floating out there about a short squeeze, yada, yada, yada. I don't know if this is just everyone's talking about short squeeze and they just misplace it. I don't know if it's hangovers from IPOE or what have you, but there has been no threat of short squeeze or no potential of short squeeze because the short interest has been nothing. It still is relatively nothing, but as we've been tracking it from day to day today, we've seen it go from 1% to 2% to now 3% per Ortex's estimates. So this continued jumping up to me does signal that they could be very, very willing to come in pretty heavily if there is a jump up based off of earnings or anything else. The shorts might be very, very interested in coming in. So I'm going to keep a tight eye on that. If it starts to get to 10%, then we'll definitely raise a flag. If it starts to get over 15, then we'll throw up double flags and start waving them vigorously. All right, let's get into these articles and just run through them just for some additional info to the extent to which it is interesting to anyone. So let's just quickly take another look at why Q1 earnings were seen as such a big victory for SoFi. So in this article, what they talk about is revenue being up 150% year over year. They talk about new members. So like we talked about, new membership still just sitting at 2.28 million. So plenty of room to grow if they're able to continue growing. That's why I'm interested in it, because there's a lot of green field out in front and they need to be capturing that if they're going to make the best use of it. Galileo added 11 million accounts in the quarter and now is 70 million in total accounts, up from just 30 million first quarter of 2020. So that's the Galileo piece that we're talking about as well. Now let's talk about the other components which are in this, what I think is a pretty nice article here. You can pop this into your browser if you want to take a look, but this person is basically talking about SoFi and the three components of their business, or three segments: the business, lending, financial services, and tech platform, with its lending segment remaining by far its biggest driver of revenue. So here, talking about the lending and what types of lending they're engaged in. And SoFi made $331.9 million from its lending segment in the first 9 months of 2020, accounting for 84% of its total $394 million revenue. So 84%. That included $139 million from net interest income. All right. Also earned $271 million, including $244 million from loans and $18 million from securitizations. So that, by far and away, the largest component. Now, I would be interested to see the degree to which some of these can start to converge on each other so that it's not such an outsized reliance on the loan segment. It's like a weird situation where you don't want to see that come down in any meaningful way and have it seem like that business is slowing, though maybe that would be perceived as okay. I don't know. That's part of what you just don't know. But seeing the technology segment come up, as well as the financial services segment come up, they could then start to sort of eat into that 84%. So it's not so outsizedly reliant on the loan segment. Technology. So here's where they talk about earning fees on Galileo's platform in two ways. And talking about platform fees totaled $51.6 million of the revenue taken in by Galileo, and how that contributed to everything. So again, here's where I think, this is what I was going to look at first. 52.2 million, or 89% of the 58.8 million in total revenue for the technology platform segment, and 13% of SoFi's consolidated total revenue. So that's the impact that Galileo might have. Again, like I said, I would like to see Galileo be having more of an impact, or at least the technology segments of their overall income having a larger impact, just to start to square away some of these segments and have them kind of consolidate space with each other. Financial services, 1.8% of total revenue. Okay, so totaled 7.8 million in the first 3 quarters of 2020. So very, very small. This is things that you're probably well aware of. SoFi branded debit cards, mobile investing solution called SoFi Invest. So these are things that, like I say, you're probably well aware of, but very, very small segment of the business. So to the degree to which usership is increased by that, I can see maybe that being a positive factor by way of users increasing, but I don't know that it's going to contribute super meaningfully to the revenue number, which, like we said, from Q1 was seen as one of the major wins in that overall good earnings report from Q1. So thanks to Stephen for that. I don't know Stephen, but kudos to you. Now this is Yahoo, well, I guess it's actually TipRanks, talking about where SoFi is coming into this earnings report, or the standpoint from which they're coming in. So you could look at this article as well for yourself if you'd like. I don't want to just sit here and read articles to you, but talking about the millennial banking population and how important it is that SoFi is here to sort of cater to them and sort of provide them services and products that they are going to want, since they are growing so heavily, especially in this fintech space. Gross margin hovering around 70%. Should the company's revenue continue to grow at a forward-looking rate of around 58% for this year, the numbers will look a lot better. Okay, so that's something that they're clearly saying would look a lot better. SoFi is a company that trades around 13x. This year's expected sales of nearly $1 billion. In other words, in order for the company's valuation to continue to grow, SoFi will need to continue to grow its loan book at the current rate or potentially faster. So that's where that heavy reliance on loans is going to sort of maybe put them in a position where they have to continue to grow that at an accelerated rate, whether or not they want to streamline that with some of the other services and ways in which they make money or not. We already talked about the analyst side of things, so we will skip that. And that is basically the video, but those are the things that I'm going to be looking for. And again, tomorrow, I'm going to be putting out my video just before market close because my Thursdays are what they are. And so I'll talk about earnings, the actual, earnings that happened. I'll talk about them in Friday's video. There will be a ton of talking heads and voices and opinions and people offering comments on on what happened with SoFi earnings tomorrow night. So I'm sure you'll have your fill. It'll just come from elsewhere. But hopefully I can contribute meaningfully on Friday, and we'll see what happens, but just keep your risk in order. These things can go in ways that are really unexpected and don't align in any way, shape, or form with what you would want or wish would happen. The market just doesn't care. So just keep that in mind. Place your positions accordingly, and just make sure that you're being cautious, or at least where you've positioned yourself and why. All right, I don't know. It's been a long day. Now I've recorded this video twice, and I still have one more to do. So I appreciate you watching. I hope your trading week is going well, and I will see you in the next video.